Hello, everyone. Welcome to today's webinar. It's entitled The Fast and the Fraudless, Real-Time Transaction Fraud Protection with Real-Time AI-Driven Solutions. As you can see, we have some great experts on our panel today. Moderating today's discussion is Chris Odie, Chief Revenue Officer from CU 2.0, and from Effective, Ravi Sandapudi, CEO and co-founder, and a couple of credit union executives as we round out our panel today. Tyler Pill, VP Enterprise Risk at Service Credit Union, and Brad Shefton. He is the Senior Vice President of Digital and IT at Magnify Financial Credit Union. All right, just want to remind you guys a couple housekeeping items before we get going. I'll hand it over to you very soon for introductions, Chris. Just want to remind everyone to please hit that Q&A button anytime throughout the webinar. We'll be monitoring those, answering those when we can. If we can't get to all of them, we'll try to do it at the end, the best we can. And we're looking forward to today's agenda. Chris, I'll turn it over to you for introductions.
Great. Hey, thanks, Stan. I appreciate that. And when you said we'll be monitoring the Q&A, you meant you, right? Because I can't do two things at once. All right.
Of course.
Thank you. Thank you for that clarification. Welcome, everybody. I'm Chris Odie. I'm the co-founder, Chief Revenue Officer at CU 2.0. I also happen to be the chairman of the board at a small credit union here in Southern California called South Bay Credit Union, which is located on the mean streets of Redondo Beach, California, where I'm sitting today. Thanks everybody for being here. Let's just do some quick brief introductions and backgrounds. Ravi, why don't you kick us off?
Well, thanks, Chris. I'm Ravi. I'm one of the co-founders and CEO at Effective. We are a fraud detection platform based here in the Bay Area, California. Prior to this was part of PayPal on their fraud team, and prior to that was at Google, part of their fraud team as well. So been spending all my life in this space.
Thanks, Ravi. Appreciate that.
Brad.
Yeah, I'm Brad Shafton, the Senior Vice President of Digital and IT at Magnify Financial Credit Union. We are based out of central Minnesota with branches right up to the North Dakota line down through the Twin Cities of Minnesota. I oversee our digital and our IT presence. While I oversee our security infrastructure stack, my primary focus is on the digital experience for our members, which includes not only seamless transactions, but safe and secure ones. Tyler?
Great. Thanks, Brad. Tyler Peel, Vice President of Enterprise Risk at Service Credit Union. We're based in New Hampshire. We have a little bit over 50 branches, predominantly in the New Hampshire area. Also unique to us and some others is we have branches over in Germany on U.S. military bases, which complicates our environment a little bit, makes it exciting, keeps it interesting. And
you have 14 branches over in Germany, don't you?
I do.
All right. And you get to spend your summer in Europe?
I'd like to. You know, this year we might make a change.
All right, cool. Thanks for the introductions there. What we're going to discuss today is obviously the prevalence of fraud and preventing it in real time. Apparently, we're going to discuss what real time means. There might be some discussion around that. I think I know what it means, but we'll see. And then real life examples and best practices for the future. I'm here because I think it's tremendously important in today's environment that we're focusing on this, right? It's time for fraud prevention 2.0 because we're all using fraud prevention 1.0, right? Stuff that came out in 10 years ago, and the fraudsters are using fraud 2.0. So it's time that we start fighting that. What I'm seeing at CU 2.0, we talk to 5 to 20 different credit unions a week, every week, week after week. So what it gives us is a good pulse on the industry. And there are certain trends that are popping up. Obviously, there's 4 major trends that are popping up. Generative AI, of course, is one of them that's popping up everywhere. Liquidity is still an issue for credit unions. But what we're really seeing a lot of is every credit union I talk to is talking about an increase in fraud. And that's why we're such big fans of Effective and what Ravi and his team's doing there at Effective to help credit unions prevent it. So we'll go through some discussion points here today, and then obviously Q&A, and you can put your questions in there, and Stan will collect them for the end. We have our first poll of the day coming up. what increase in fraud have you seen over the last year? Leads into what I just said, right? Let's see if I'm right. As people see, I would bet 10% or more is what we're seeing. Tyler, you want to take a stab at that? What are you guys seeing over there at Service?
Sure. You know, and fraud versus fraud attempts is an interesting, delineation. But I think, fraud costs, absolutely, for us, especially, I'd say not only the past year, the past couple of years, way more than 10%, right? So significant costs. And, it ebbs and flows. And that's the challenge in it, is it's a really hard item to budget because you don't know when you're going to be attacked. You don't know what the attack vector is. And then just the trends are constantly changing.
And I think that's across credit unions, regardless of size, right? This is one of those things that size, it doesn't affect your instances of fraud. Brad, are you seeing the same thing? And let's do a quick, Tyler, how big's your credit union? Brad, how big's your credit union? Tyler?
Yeah, so we're $5.5 billion in asset size.
Okay, and Brad?
Just around 2.3 billion.
Just around 2.3 billion. And South Bay Credit Union is at 150 million. And we're seeing the exact same thing. So Brad, why don't you talk about what you're seeing?
Yeah, without a doubt, we're seeing increases somewhere. I don't know if I'd be 5 to 9 or 10%, but definitely in that range. To Tyler's point, though, it's the variation is happening much faster. I'm sure we all see this change from one vector to another. And instead of it happening month to month, it's now happening week to week, if not day to day. And so that just makes it more complex. It makes real time more important. But the impact that it has on our members is growing significantly because as they change vectors so quickly, it also means the complexity gets deeper. It's more work for our staff and it's a bigger impact on our members. And that causes us to, we need to act faster. The losses, certainly they mount up, but what is really hard to put a dollar amount on is that impact that it has to the member experience.
Hey, Chris, I just want to break in and give you the results of the poll. You must have had a crystal ball because 100%, over 10%.
All right. Yeah. It turns out, having been in the credit union industry since 1994, I may actually know a thing or two about credit unions. Hey, Robbie, you get to sit in the catbird seat running effective.ai.
Yeah.
And so you get to talk to dozens of all of your clients in the industry as a whole. What are you seeing?
No, it's the same. I mean, even beyond credit unions, so we also work with a few banks, and it's across the board, right? So we see fraud increases from like payment side and at the onboarding side, and the tricky part is they're getting very complex, right? So people using few like deep faked identities to get in, and then once they get in, like trying to emulate voice to initiate wires on phone banking. So yeah, it's getting harder and harder to kind of identify these folks.
Great. Thanks, Robbie. So just a quick overview, and then we'll get into the who's and hows and what we're seeing. But the growing threat of fraud in the digital age, reality or perception? Tyler, why don't you weigh in on that and the different channels and different threats that you're seeing? Where are you seeing it coming in from? Is it real or is it perceived?
Yeah, I mean, it's definitely real. And if you're not experiencing it yet, it's one of those things that, you need to prepare for before you see it. Because like us, we went to a federal charter, we expanded our membership, and we had made a lot of changes to our organization and didn't really think about the implications from a fraud standpoint. And then when it happens, and it happens fast. And you're trying to close those gaps. So it's definitely a reality. If you're not seeing it yet and you think it might be perception, it's one of those things that can easily creep up on you, and then it's a problem before you realize it. Definitely different channels. And that's one of the challenges, I think, for credit unions is we've added on, we have our core system, and then we start to add on all these, new shiny objects. And once you do that, and they involve, either whether it's opening accounts or it's different payment channels, having a fraud solution that's looking at those channels and is able to get that data in a timely manner and then react to that data in a timely manner, it becomes very challenging when you have all these disparate channels that you're trying to manage. So, and that's where fraudsters will just start picking away at one and the other, and they do it very quick, and they can attack them faster than you can remediate them.
Brad?
We've actually, just because if so, I just wanted to respond to Tyler. Is we've seen one situation with one of our other credit union customers is they actually didn't know that they were getting hit by fraud. So until we worked with them to do some historical study, and there were like these tons of mule accounts where accounts of members were being used to like launder money, and the members never complained because they were always left with a slightly higher balance in their account, with folks like moving in money and moving money out, and the fraudsters were smart enough to let the balance go up slightly, right? Like they're not like reducing the balance amount. So it was pretty interesting that there's this unknown unknowns, right? So you don't know actually until you look at your data whether you're getting it by fraud in some situation. Sorry,
Yeah,
Go ahead, Brad.
and that's such a great point, because you would think, Tyler mentioned all these new channels we bring in, right? More P2P, digital banking, and you would think that people have more insight into their data because that's right there, at their fingertips on their phone every minute of every day. But in reality, they're trusting the credit unions and the banks to have more tools and more solutions. And, I'm sure many of us 10 plus years ago would take our bank statement against our checkbook and balance it out line by line. Now we don't have to do that. We have it in our hands at all times, and yet people are not doing that. People are not paying that its close attention. So the scenario that Ravi described, I'm sure a lot of us have seen, where somebody puts a check in for $750 and then they withdraw $745. The $5 difference isn't going to make a big difference. And then by the time that's caught, now it's too late. By the time that check gets returned, the money's gone. But what I think they're doing to the question here is the reality. It's 100% real, but I think there are counter operations to provide a perception of fraud as well, to distract from the reality of it. And so there's these efforts that operate in parallel, both real and perception, to distract from the other real channels that are going on. So perhaps new accounts are being opened that aren't necessarily even being intended to be used, but to distract your fraud approach so that the transactions that are fraud don't get seen. We all have limited resources, and it is, that's because those different channels and different threats on each channel. Whether, if you're like us, you have 3 different ways to deposit a check: mobile, ATM, in person. And the fraudsters will vary their approaches, because as you or any credit union or bank, as you lock down one, they quickly move to the other. And so when you have, I couldn't even count, 10 different methods of transactions, maybe even a low number, they can approach a different one every week, and it's 2 months before they hit the same one twice. And that creates a challenge, right? 10 years ago, we had a debit card and we had a checking account, and that was it. Now we've got multiple P2P methods. We have multiple debit cards, credit cards, multiple accounts, 3 different ways to deposit, wires, bill pay, on and on and on.
Yeah, I just paid. It turns out I'm a horrible golfer, so I just paid 3 people today bets that I lost playing golf yesterday: Apple Cash, Cash App, and Venmo. Right, 3 different ways to pay people, and so that when you talk about multiple methods of payment, you're not even scratching the surface of the P2P stuff, right?
Yeah.
But that leads me to let's talk about the need for real-time fraud, because this is what I dig about Effective in the real-time fraud detection and prevention. Is it really important? Which, that's a dumb question. Of course it's important, right? But how do you stay ahead of fraudsters? Brad, I'm just going to stick with you. Do you want to touch on that for a second?
Yeah. Stan, do you want to put a poll up on this one?
Oh yeah,
Absolutely.
the next
Absolutely.
poll. Yeah, while we talk about it, let's put the poll up.
You guys see it?
Yes, we
sir.
do. Thank you. Yeah. So I think this leads into it great. So hopefully that was on the agenda in the proper order. The reality is the solutions that we've been dealing with up until recently may sell themselves as real time, but the second that transaction processes, even if the transaction's on hold, it's really too late. And real time means in the process of to me, hopefully I'm not guiding answers in the poll question here, but it means inserting yourself in the transaction, preventing the transaction as it happens, not holding things after, not even same day isn't real time. And how many solutions do we all work with that are not even same day, that are next day? But unless you're inserting yourself directly in the transaction, not only maybe you get the money back, maybe you put it on hold, but again, from my world, what's that member experience like? Now that they've got something on hold, maybe it's even a true transaction. Wouldn't we rather prevent with great certainty those fraudulent transactions right when they happen, rather than make that person's life confusing and making phone calls and, you know, having to put accounts, you know, freezing accounts and whatnot. So to me, again, not to guide our answers in the poll here, real time is right there in the transaction as it happens.
Yeah,
I think,
Tyler.
I mean, to elaborate on that, right? Like, my role overseeing enterprise risk is I'm not in charge of the member experience. So I want to be able to enable their success and not hinder it. Right. So if I don't think of real time, then they're going to put stuff down the pipeline, and it might not be this year, but it might be next year, the year after. And if I build protections in place that run off of batch or are slow, then I'm going to hinder that business from onboarding new solutions, or right, like as we look at FedNow, and we were one of the early participants of FedNow here at Service Credit Union, we're doing receipt right now, but we can't enable send until we really get this ironed out. And again, that payment interdiction can come into play. So whether we dictate it on our roadmap, or my peers dictate it, or our consumers demand it and our members demand it, we need it regardless.
All right, so there you go. We got some poll results there for you. And while they're up there and everybody's taking a look at them, I'll let Robbie take a stab at this one.
Yeah, no, very interesting results. And I think there's a study I can share after the webinar, but there's this McKinsey one that says that like a financial institution spends 2.5 to 3 times more on managing fraud issues than actually the fraud transaction, right? So even if you're able to pull back money in an offline way, or in a non-real time way, you're actually spending money, because there are agents trying to deal with that issue. You have to write reports, you have to make a case, and so on, and you end up actually spending as much money on the fraud issue, on the transaction, than the actual amount that was transferred, right? So you'd as well just accept that a mistake was made and just pay out the member directly. And so it becomes very critical, I think, that way, that like Brad and Tyler mentioned, that we are able to stop it even before all of that happens, right? So if you're able to stop the transaction in real time when someone is initiating, especially on an online banking portal, that makes it very powerful. And obviously the member experience is so much more better. There are issues with that. I think how to tackle some issues that we have seen with super real-time responses as well. I think we can discuss those down the line, but there are some interesting techniques to tackle those too.
Great, thanks.
And I just want to throw out, you know, to the poll answers there. I actually see a coworker of mine on there, so you know, to point out those results are probably likely the results that 1,000 credit unions would give. I mean, that's the reality of what we face, and using the newer tools that are coming out, like Effective, are real differentiators in getting in front of this, because that's the reality that we've all faced for years and years. Is it's the next day, or maybe there's a challenge. I mean, there's some products out there that will alert you or challenge, but they're not actually inserting themselves in the process. They're putting a hold that they may process later. And to Robbie's point about the cost to internally process, then I'm going to guess the member experience cost is also multiples of that. You add those two together and you're at 5 to 6 times the actual dollars and cents cost of fraud. And that's significant for all organizations. To your point earlier, Chris, the size doesn't matter. It scales across all credit union sizes.
Mm-hmm. Yep, and that brings us to the next slide. If you want to advance it, Stan, about escalating fraud landscape. So let's talk about the risks associated with payment fraud, right? And then let's talk about the role of AI-driven solutions in combating it. So Tyler, why don't you talk about the risks associated with payment fraud?
Sure. So as we talked a little bit about today, payment fraud, right? It's every angle. And one of the things that we've been thinking about as we think about our fraud strategy is we have to be able to detect before the member knows that they're being duped or defrauded, right? You kind of have those couple different vectors of attack. You have people that are going to use synthetic IDs, try to open up accounts, mule accounts, and move money. You also have those people that just bypass attacking you and they'll just go for your members, right? And that's where you start to see a shift of AI, because you can do that at volume and at scale so much easier with the phishing and the smishing and all the ishing type things. They can just constantly attack your membership, and they're gonna fall for it, right? There's no level of education that you can do that will prevent 100% of your membership from falling for scams. And just the worst, and we'll get to examples later, but the worst feeling in the world is knowing that someone fell for a scam. And yeah, maybe as a credit union, it's not a Reg E covered item, so I don't have to reimburse them, but now they're out $10,000. Right. And we have a big military population. I've seen it with people that are in their 20s, right? And that impacts their financial future. And to not take those things personally is really challenging. So you look at that environment and you really have to be able to detect it before your member even knows that they're falling for a scam. And that's where all this real-time interdiction and the awareness around what your members are doing is really key and important in order to protect them. And that's our responsibility as a credit union ultimately. And it's gonna be highlighted over the years to come.
Thanks, Tyler. Brad?
Absolutely. I think we have an obligation to inform and educate our members. But the reality is the sophistication of these techniques, just like our fraud prevention needs to play catch up, our education is always going to be behind as well. And so that's why you need to have the combination of the two to try the best you can, right? It's real-time fraud prevention. It's educating your members. It's continually updating both of those techniques to protect yourself and, to Tyler's point, protecting your members. I could have all the tools in place, and there still is an approach that somebody who wants to get in is going to find a way to do it. But back to Ravi's point earlier, when the cost of the fraud on the time is so much higher than the dollars and cents, we need to minimize where we can, because those things are still going to happen, and that is going to cost us money. So how do we ensure that we are limiting to the it's going to happen? How are we limiting it so that we can spend the time addressing the fraud and helping those members, ensuring, not to keep going back to the same point, but ensuring that member experience is as clean as possible.
Yeah. And Robbie, maybe you can touch on the role of AI-driven solutions. It certainly is in your wheelhouse. And I always, when I describe it to credit unions, when I'm talking about effective, is the Tesla example, right? When one Tesla crashes, every Tesla on the planet learns from that, right? When I crash my Ford Explorer, nobody learns. Hell, I don't even learn, right? So that's kind of like, how I oversimplify things. That's basically what you're doing at effective, right?
Yeah. Yeah, I think it becomes very critical on that point, Chris, like you mentioned, because there are now so many tools, like Brad mentioned, for fraudsters to use, so that they're trying out new ways to get around things. And the only way to address that is by looking at the network, right, and learning from each other. Unfortunately, there's no simple way for financial institutions to collaborate, right? And I think that's something that we have to work towards eventually. But we try to do that, right? At least at our position, when we are able to see and work with multiple financial institutions, and our models are able to learn from the patterns we are seeing across our customer base, we are able to share it through that, right? So when our models learn from certain fraud patterns that we have seen, maybe the first one goes through, but we are quickly learning there. And then that learning is now available to all the other credit unions and banks that are on our platform. And so I think that's becomes very critical. And I think as an industry, we need to work very hard towards it, and make it more standardized, right? So what we are doing is obviously at our scale, but if you have a standard way of sharing information in a privacy-centric way, I think can become very, very powerful.
Yeah, if we could get all the fraud to start at Service Credit Union so that when it gets to South Bay, we can prevent it, that'd be awesome.
Yeah, I'm on board for that as well, because
I'll give you my notes.
yeah, I mean, ultimately, there's somebody's the first, right?
Yeah.
And so if we can, we'll rotate. I'll tell you that, Chris. Just skip us, but you know, we don't. It doesn't all have to go to service first, but somebody's got to be the first. So if we can learn from that, then and it gets stronger over time. Someone's the first, and that's not going to be fun. Somebody's going to be second. That's going to be a little more fun. But on you go as you learn from it. We can help our members, and the techniques are never complete. Well, at some point they were completely new. There's evolutions of these techniques, and that helps AI to start to build. Okay, we don't completely know this, but we know 75% of this, and that's concerning. And that's where the continued evolution, the traditional methods are always playing catch up and not doing it overnight. They're doing it in days, weeks, months to adjust to those changes.
And I think super point, Brad. I think like fraud detection has moved from quote unquote a classification problem where we learn like where we have examples of when fraud has occurred and try to identify similar patterns going forward. But now it's become an anomaly detection problem, right? Because the fraud techniques are so varied and they change slightly every single time. We try to say, hey, is this transaction expected from this kind of member with this who falls under this demography and from at this time of day and using this browser and so on, right? And then once we see that, hey, this is anomalous and this is not typical for this kind of person to do this kind of transaction, then we try to add on to something else, right? Like then we try to say, hey, do we allow this transaction to go through, or we add an additional friction layer, right? So maybe let them do an OTP, or let an agent even sometimes call and verify that they're sure that this is happening, and so on. And actually, on that front, Tyler, Brian, and Chris, I wanted to ask you one thing about scams, right? So, Tyler, you just touched upon it. When one of the members is scammed on initiating the transaction themselves, obviously that's not under Reg E. How do you classify those, and how do you try to handle those within your credit unions currently? And we are facing a lot of issues there, right? Like some of our customers don't want to deal with it. Some want to, obviously, because it heavily impacts member experience, but it's also a very hard problem from a fraud detection point of view.
I would say we had I've been involved with our fraud department for probably about 15 months now. And right prior to that time, around that time, we were having significant account takeovers. So that was a world that we were living in, to the tune of, we had upwards of 15 to 20 accounts being compromised per day. We have it down now to where we see a handful, maybe a month, and that's tools that we put in place. But you really have to, and we have a pretty generous, I think, Reg E interpretation, and I won't go down that path. But regardless of all of that, we handle them like we do any case, right? I mean, we have those people that are trying to attack us, and it's the same individuals, our investigation team, that's handling those calls and those conversations. But we really took a personal charge on we need to try to protect our membership before they know what's happening. And we've been able to reduce that as a result of that mentality. But then it's as soon as those funds are left, and sometimes the member is the point of contact, and they're saying, I fell for something, right? We've trained up our team to be extremely aggressive in trying to do what we can do to get those funds back. And a lot of that is understanding the payment channels and understanding, all right, if I find out about this 24 hours later, then how do I pursue those funds, right? It's not just the case and working the case and saying, oh, the member's out $10,000. It's, can we get that $10,000 back, and how do we pursue it as aggressively as we possibly can? So there's a mentality shift that has to happen too, in fraud teams, I think, as well, to handle that, Robbie.
Yeah, and our approach would be very similar. From all fronts. You've got to attack it from both fronts. I want to make sure the member, has a good experience. Of course, I want to get the money back wherever I can. I do think there are some variables, different situations. Certainly the same situation, if it happens across multiple people, is going to get treated the same way. But there are so many variables in the picture because there are so many channels that sometimes those do get handled differently, depending upon any number of factors. But our goal is to get out in front of it, make sure the member understands what's going on, inform them both from an educational perspective and to be transparent, and then help them as well as protect ourselves.
Great, thanks, Brad. I think that might be a good segue into understanding real-time monitoring, right? How do we understand it? Analyzing transactions in a real time, right? I come from the core. I sold core into the credit union space for a dozen years, right, at Fiserv. I can tell you that Fiserv can take a product, can build a product that can do this. It'll take them about 18 months. And then the team of experts they got to build it will build it, and then they'll leave to go do something else. And then it stagnates. So what you end up with is a great fraud product for about a month, right? Until the fraudsters figure out how to get around it. And then credit unions will still be using it 24 months later. Whereas what you're doing at Effective is that's all you do all day, every day, right? You wake up and you're preventing fraud, and that's what you're focusing on. I think that's one of the realizations the industry needs to come to is innovation is going to come from innovators, and it's not going to come from incumbents. And that's why I like what you're doing here in real time. But I need to understand a little bit more about real-time monitoring and how you're doing this, Robbie. You want to expand on that a little bit, and then maybe Tyler and Brad can give some examples of how they're using your solution at their shops to prevent fraud?
Yeah, for sure, Chris. Yeah. I think the fundamental thing is how do you prevent the money even going through, right? If you identify that it is a fraudulent transaction, and obviously different money moving modalities and different rails act differently. For example, like ACH in the end still goes through NACHA files, right? And the way through which they're initiated can be multiple, right? So either through online banking, right? They can be initiated through phone banking and other kind of methods. So how do you kind of try to tackle this in real time across multiple channels, across multiple payment rails, right? So that becomes very critical, and it is tough because there are these things happen across different products, like Chris, like you mentioned, some might be initiated from Fiserv, some might be from some other product, and so on. What we try to do is plug into those upstream systems as much as possible and work through this modality called APIs, right? So where the system is telling us in real time that, hey, I'm going to initiate this transaction, should I do it? And we tell them back that, okay, maybe not, or yes, this is looking good, and so on. And behind the scenes is all of things like rules and models where we have trained these AI models on historical data, like we mentioned, across our customer base, and fine-tuning it for each credit union once we get more information from them. And all of this is happening in a few hundred milliseconds. Right? So that's, I think, the new reality, and that's how we need to operate, because fraudsters right now, what they're able to do is use similar kind of techniques to bombard financial institutions by changing making slight variations in the transaction times at the same speed, right? So they are able to make multiple thousands of transactions per second by changing slight criteria and trying to test the limits that a credit union might have put, right? For example, let's say you have a limit on Zelle for, let's say, $500, right? And they want to know what that limit is. So they will try to test 1,000 transactions by changing limits from $1,000 all the way to $450 and see which one goes through, right? And then as soon as they know the limit, they'll stick to that limit and go under the radar from then on, right? So in order to tackle those kind of situations, you need to have something that's more dynamic behind the scenes as well, and change these limits to be very dynamic as well, right? So you're able to detect what kind of behavior is happening, and your models are learning in real time as well. So two things from a real time perspective: one, you're able to respond in real time, right, and integrate with the systems so they can consume your decision in real time. And two, you're learning in real time, right, and you're dynamically updating your strategies in real time as well. So both become very critical, and that's, I think, where the whole fraud detection industry needs to go towards.
Tyler, you got anything to add to that? Talk about how you're doing it at Service.
Yeah, I mean, you know, it really starts with your data. And a lot of, you know, as we've looked at the market and looked at our providers, our existing solutions and what's out there, it comes down to, right, the other teams ultimately being able to ingest what you have, right? And it's either through integrations with APIs, which obviously is going to get you that real time, but there's a lot of times where that may or may not make sense. And you go to, you know, provide a file, and it can be out of online banking, it can be from a different provider or whatever, right? Again, because not everything is as simple as I have online banking and I have my core provider. You have all these other reports that come from different places. And one of the questions to ask that's I found really helpful is, are you mapping the data or am I? Right? Do I have to give it to you in a fixed file format? Or if I just give you the file that gets produced out of this system, can you take it and map it? And you're going to find a lot of those legacy providers that are not able to do, right? You need to fit their model. And there's some strengths to that, which we won't go into today, but it is really important to understand, if the more data you can get in, the better decision making you have, right? So like online banking channels may not have the date the account was open. It might have the enrollment for online banking, but it might not know when that account was open. And when we think about like dormant accounts and legacy accounts or new accounts that are trying to move money as fast as they can, that information is really insightful to making real-time decisions. So trying to bridge the gap of those two data points, you'll have online banking providers that say, oh yeah, we integrate with whoever, right? But then now you're off in a silo and that's all that it has. So you really have to bring everything together and look at a provider that, if you don't support this vendor that I'm looking at, how do I get an integration there, right? Because a lot of vendors will have, we integrate with A, B, and C, right? But what if I want to explore a fintech? Well, now I can't do that because you don't have a direct integration, and I've got to either pay you for it or get it onto your roadmap and convince you of that. So having someone that has a flexible data model, I think, becomes really important to actually executing this.
Brad?
Yeah, and to build off of that, you know, at least in the IT world,
Please.
right? We have this decision. Do you want best in breed or do you want to consolidate? And there are some areas where having a vendor that can, or a solution that can address multiple challenges in your organization is great. But to build off of Tyler's point specifically, this is one area where you can't, because when you go with that prior approach, you end up with people that do become focused and isolated specifically on what they offer. And so having an agnostic technology provider allows you to build out those integrations with no conflict of interest. Effective doesn't offer a payment solution. Effective doesn't offer check processing, so they're not going to give preferential treatment to one of those things. They want to work with everything because their knowledge only grows from the more technologies it connects with. And I think, you know, Chris, to your statement earlier as well about some of these core providers coming up with solutions and then the staff leaves, I think that is what makes the generative AI perspective of Effective so important. Not to foreshadow anything about staff, because I know that's not the case, but Effective has built a system that runs on its own. It is constantly learning. So if you have a static approach, and to your point, Chris, the staff leaves, now who's going to fix it? Well, solutions like Effective fix themselves. They're learning, they're building off of that, and they're processing new transactions. And to specific examples, you know, Ravi gave an example that's very applicable, where people are putting checks in and then they're seeing how much they can withdraw and kind of testing the boundaries and push it a little bit more and a little bit more. Will systems catch 5 checks with the same amount? Most probably will. Will they catch the 5 checks that are off by 12 cents, 8 cents, $4, and then it goes out via Cash App in one lump payment? Now you're going across 2 rails. You've got variation that in a report of all of your deposits doesn't necessarily stick out. Human intervention, it would take so long to catch that, and traditional solutions just won't. And that's where AI can come in and say, this behavioral trend, and that's one of the things I love about AI Effective, is it's looking at the trends of that member to say, you know what, these deposits alone don't seem suspicious, but if I look at this member's historical behavior, now it suddenly does become suspicious. They don't usually do transactions this volume. They don't usually do this volume of transactions. Look at your historic providers and ask if they're doing the same thing, because they're likely not. They're likely treating every deposit as an individual deposit. But if I suddenly am making 5 deposits in one day, and I've only made 5 over the last 6 months, that's suspicious. But 5 deposits alone isn't necessarily suspicious.
Great, thanks, Brad. Yeah, go ahead, Robbie. You want to add something there?
No,
Oh, you're good. You're good. Okay.
I'm good.
Okay. Yeah. Let's get into best practices, like what's working. And I'd love for anybody in the audience type in an example of a fraud case that you've seen, and maybe we can discuss that as well if you're up for that. You don't have to point out that your credit union got scammed out of. I'm not looking to shame anybody, but any use cases would probably be good. What recent trends and challenges are you seeing? Like Tyler, what's the latest thing that you've seen at Service Credit Union? Oh,
Yeah,
and by the way, did you notice I'm using my Service Credit Union mug?
Excellent.
Thank you.
Good for you.
Total accident.
Perfect. I had to dig that one out of the back. I know. Yeah, I mean, for us, it's, it tends to be one of our challenges has remained the P2P solutions are a challenge, and it tends to not be our environment, right? So the PayPal, Cash Apps, Zelle, not so much, because we handle that through our environment. So that's like through the online banking environment. We have the ability to do step-up authentication, some other stuff with Zelle, but it tends to be new accounts and then sending ACHs in, and that money going out via Cash App or Venmo or some other means. So, and then the ACH ends up returning pretty promptly, but again, like with the same day ACH and those funds being available next day, and it all comes down to the timing battle, right? And with our online banking, and again, that's an example of, we've got third-party services that are impacting that account. We have ACHs that are originated through online banking. We're the ODFI of those transactions, and we have relatively new accounts. And that's one of the areas that we're trying to pursue right initially is when looking at a solution like this. And I'll be honest, right now we're using Effective for account opening. So we see that real time. We see that we have a pretty complicated technical environment, and all of that information passes right lightning fast, and it runs all of those security checks, returns it back to our core, auto books, auto funds, all that stuff is working really well, and his team did an excellent job. And in our next phase of that is looking to bring in real time right transactions. Part of the challenge again is I have a lot of legacy vendors in different areas, and it's not a problem for Ravi and his team, but it's a problem for understanding how do I get that data to them, right, with the least amount of effort. And we all have a million projects going on, right? It's just a real challenge to find resources internally and say, all right, I have a vendor that's ready to write to the APIs, but now I need our dev team that's ready to do it as well in our environment and understand what that team needs. So it just becomes a challenge. Once you built it out, you're in good shape, right? But that's for us. It's ACH continue to be a problem. It's one of the reasons we've shied away from FedNow until we get that solved. But that same model will translate to FedNow, right? That payment interdiction to say, hey, historically, it's exactly what Brad was talking about with the check example. The ACH example, same things. Like a human puts eyes on them and they know that it's bad, right? Your first instance is it's a brand new ACH. I'm depositing like up to the maximum amount, right? And we have manual processes that catch a lot of that. It's just not rocket science, right? And that's where the AI really does come in. And historically, you can look at that and say, this makes no sense whatsoever, right? And generating alerts or interdicting on that payment saying, you know what? I know that you submitted it, but it's pending. And that pending now reflects in a queue that we're going to put eyes on before we release it. And there's a lot that will be happy path, right? This is normal activity for you. You're transferring money. We see it, green light, and that automatically goes. It's in your notcha file at the end of the day. But you start to see that friction in the transactions in the history, whether it's a new account or it's anomalous behavior, it's a brand new payee, all these things. It's a risky institution. That type of stuff is where you're going to start to queue those off and have the ability to say, you know what, now I'm not trying to prevent it or interdict manually and delete it out of our online banking provider before it goes. It's sitting in a queue. And I have to respond to that and have SLAs and managing that queue, but it's a different world.
Yeah, and I just want to point out the understatement of the year by Tyler. At Service Credit Union, we have an overcomplicated tech stack. Jeez, that's the understatement of the year. You got branches in Germany and core conversion. You guys have the most complicated tech stack ever.
It's not easy.
Hey, go ahead, Brad.
Well, I think the microcosm of this all is I can echo half of what Tyler is saying, and at the same time, we're seeing completely different things, and that, I mean, that's the challenge. We're actually not well, the fraud that comes from within accounts is actually not on new accounts the majority of the time, which I think is not what people would expect. I think we can make a number of conjectures on why that might be, but we're actually seeing a lot of our fraud when it's with, you know, within the member's account on older accounts. We're seeing account takeover, you know, quite a bit. They go to Zelle because it's the easy place to go. But obviously all the other P2P, you know, the lack of oversight on the other P2P channels is a problem. But that was a surprising thing to me, right? We all think, oh, accounts within 90 days are going to be the most likely to be fraudulent. It's not what we're actually experiencing. Certainly those are, but we're seeing it in other areas. And I think the challenge, you know, to echo what Tyler said, is the resources. The individuals that need to be a part of defining the path forward and what our rules should be are also the people that have to be out there fighting the fraud on a daily basis. And our members have to come first. And that time constraint is going to be a challenge for everybody. I want to get out there and I want to make the best experience for my members. I want to minimize their losses. I also know that the best way to minimize their losses and give them the best experience is working with effective and putting rules in place. And those become a conflict as a result. And that's the same conflict we're all going to face, but we can't let, you know, one be the enemy of another. We have to do both. So, you know, that's a challenge we've got to face. And that means accountability across your organization. We have a very cross-collaborative team working with effective from all aspects of the organization so that we can help each other and take a little bit of load off that fraud team so they can continue to work with our members.
Yeah, thank you. This is, you know what, guys, this is awesome for me because I have, in 12 minutes, I sit on the CUNA Faster Payments Subcommittee. And yeah, it is as exciting as it sounds, but real-time payments, right? That's what we're really focusing on right now, and identifying the credit unions that are sending money, right? Because everybody can receive it. And hell, even South Bay Credit Union could receive real-time payments, but sending it is where the fraud really comes in. And so thank you for letting me participate in this, because now I've got some value to add to the subcommittee meeting I've got in 12 minutes. Sorry, Robbie, you want to talk about the trends and challenges you're seeing and how your tools can prevent those?
Yeah, I think challenge is exactly what Tyler and Brad mentioned. I think because the tech stacks are so complicated in the credit union space and the broader FI space, I think having that collaboration with across the technology providers becomes very critical, especially in something like fraud, which exponentially becomes powerful when you're able to centralize things and you're able to look at everything that a member is performing in one single place, right? So I think that is definitely a challenge. From a fraud domain perspective, the kind of things fraudsters are using, like we have one example, another credit union, not Service, not Magnify, but we've seen one example where someone lost a driver's license in the New York subway, and the fraudsters, I mean, they stole the driver's license, and just using the image on the driver's license, we're able to create a deep fake video that went through liveness check on an ID, like an ID verification service. So they let them create an account and a membership by just using that image, right? I mean, the fraudsters were able to create a real life looking
Wow.
video and pass all the liveness checks and things of that sort, right? So these kind of things where we were able to do like point in time verifications or frictions at the time of onboarding or like do an OTP a transaction and things of that sort, they are getting around it, right? So we were able to identify after the onboarding has happened, the kind of behaviors they were doing was super atypical to a new account, new member behavior, right? And then we were able to flag that, hey, this is not looking right. This doesn't look like a person who's living in New York City that's created a new membership. Why is money coming in from an international wire for the very first time? Because the driver's license says that they've been living in New York for the last 20 years, right? uh, so I think we need to like look at this in a continuous manner, right? So starting from onboarding, obviously, and then looking at how they're behaving, how the member is acting with the credit union, what is the typical behavior that we see, and so on. It becomes, yeah, it's challenging, but needs a lot of collaboration across technology providers like Brad and Tyler mentioned.
Thank you. So I had a question come into me directly. If you don't mind, I'll just ask it, and whoever wants to jump in here can take it. But traditional fraud systems like Falcon have a false positive of 8 or 9%. And that's not me saying it. It's a person asked me the question. I don't actually know if that's true or false. But how long does it effective take to get tuned, to get fine tuned? And what is the typical resulting false positive percentage? Does anybody have any numbers on that or examples?
I can take a quick stab at it, Chris. Obviously, the advantage of having machine learning models is they can fine tune to very granular levels, but it's a balance, right? So obviously, you can tune your models to be extremely strong on catching all fraud, but that means that you might reject certain good transactions, right? So it depends on the financial institution's fraud appetite or the risk appetite. So do they want to have super seamless experience for members and are okay to take a little bit of a fraud hit? Then our models can be tuned towards that, right? So um, like very high precision, okay, recall kind of thing. Whereas if you have certain products that are super risky and you want zero fraud, then the models can be fine tuned towards that as well, right?
Okay.
So that kind of flexibility is possible with machine learning models that wasn't available when you have like very handwritten rules or you have manual processes. Those are not possible. I think that's the advantage you can take.
So
And I think to that first question,
Yeah,
from
go
our
ahead.
experience, Ravi, correct me if I'm wrong, a 60-day learning period.
Yes, that is very typical. Yeah, 60 days gives enough data for models to be super fine-tuned.
And Tyler, yours is 59 days.
Yeah, we're always 1 day better than me.
Well, it's only because it's a leap year, Tyler. Would have had you last year.
Exactly.
That's great. Well, we're coming up on time here. I want to stop and say, Stan, if you're still out there, if you have any questions that the audience has submitted, you want the panel, not me, but the panel to address?
Yeah, there's at least a couple in here. What is the future of fraud detection? And does it include both traditional and AI methods, or will one of those eventually win?
I could speak to our approach on that. At this point, we see a need for both. I think it speaks to that false positive aspect of things. We have full trust in effective, but the evolution of fraud means you have. Again, I support both this world, but also our IT infrastructure and safety security. Excuse me. You need a multifaceted approach there. You need a multifaceted approach on fraud as well. I think the solutions, our feeling is the solutions will continue to evolve, and in the coming years, we will reevaluate the need for both traditional and real time. But for the sake of our members, you need a multi-tiered approach right now. And you kind of see where it goes. I think anybody who can forecast what the fraud landscape looks like in 2 years, give me a call. I'd love to hear it.
Yeah. My guess is they're just guessing.
Yeah. Or they're the bad guy.
Or they're the bad guy. Were you pointing at Tyler when you said that, or is that just by accident?
No, you.
Okay, that could be. That could be too. I'm not going to argue with you. Yeah.
The only other thing I'd add to that is that, you know, and it's like any AI discussion, right? What's it going to do to the jobs in the market and all that, right? And it's, for me, it's just a shift of resource allocation, right? Like we talked about education earlier today. If I'm not handling cases, you know, the kind of the first wave of AI and these modern tools is you have less casework and more analyst type work or more alerts that you're reviewing. But once you minimize that, now you can shift towards more value adding things like, right, maybe I have a deeper conversation with our members, or right, I start to focus on the education front of the various scams and stuff like that. There's always something to use those individuals for. It's just, right, like the more you can minimize casework, it might take some, I can do one case or I can work 50 alerts, right? So the more I can minimize cases, the better I can shift those resources into alerts. And then you just want to get them further upstream. And it's just far more value adding for that individual. Also, like, who likes calling fraudsters and like trying to claw money out of their hands? It's fine working with victims, but trying to chase down fraudsters, it's miserable, right? And it's an impossible job.
Yep, I agree. All right, Stan, you want to squeeze in one more question, or you want to call it?
Actually, the other question was answered when you guys went through the slide. So I think we're going to call it. So I'll let you guys wrap up while I put this last polling question up here real fast. So if you'd all take a second to wrap up, and then we'll end it after that.
Okay, great. Well, I wanted to thank our panelists here. It's great input, guys. I really appreciate Brad and Tyler. I'm not a user of the product. I'm not fighting fraud every day. So I couldn't actually answer the questions you answered. So thank you both very much for being here. Robbie, thanks for hosting this thing. And I think we'll give everybody back 3 minutes of their day.
Great. Thanks.
Thank you.
Thank you so much.
Everyone, thank you so much for joining today's webinar. Attendees out there, and for everyone out there, Tyler, Chris, Brad, and of course, Robbie, thank you again, and have a great rest of your day.